Welcome, and thank you for joining today's Bedford Consulting webinar on Anaplan's solution to connected planning. My name is Samuel Ndebele, and I'm a solutions consultant at Bedford Consulting, and I'll be taking you through this demo today. If you have any questions, then please post those in the questions section, and I'll take some time either during the demo or at the end to go through those and answer as many as I can. So today's focus, of course, is on connected planning, and I'll begin by explaining what connected planning is and some of the other terms that you may have heard it be referred to. So connected planning is, of course, the Anaplan term for it, and it really refers to using one platform to answer all of your business requirements, all of your business needs across your various business functions, whether it be finance, supply chain, IT, marketing, workforce planning, or sales, or others. So connected planning is also referred to as integrated business planning, or more recently, Gartner refers to it as extended planning and analysis, or XP&A, all referring to the same thing, and of course, lending themselves to Anaplan's strengths in terms of this connected planning platform that we have. So Anaplan as a solution is, of course, use case agnostic. So on this Anaplan platform that we have, we are able to build all of the solutions that you require in relation to the different business functions that have various challenges that need solutions. And today we'll focus on the ones that we can see here on the screen. But of course, this is not an exhaustive list of use cases that we can cover in Anaplan in the connected planning environment. This is an example of how that works. And within each of these use cases or within each of these functions, I'll be given an example of how it may work in Anaplan. But again, we could have full implementations of many different ways of working within each of these use cases that we have. The first step for that would typically be a scoping session where we'd be able to look at the requirements that you have as an organization and of course match that to the solutions that we can provide in Anaplan. But today is an overview, and in this overview, of course, we'll get a nice high-level view of what Anaplan is and how it works in relation to connected planning. So we'll begin here in finance, which is, if you like, the start and the end of the process. And in this, we're looking at a scorecard summary. And this scorecard summary is really a collection of lots of different information that exists beneath. And this could be coming from lots of different models that we have or different applications within our Anaplan environment, or alternatively, it could be coming from one model that has lots of different modules within it. So the choice is yours in terms of what you bring together. But ultimately, what you'll find with Anaplan is that we're able to pull lots of different information from lots of different sources and express that in succinct reports so that business users can access the information that they need. And that's what we're seeing here in this scorecard summary, where we're able to view our revenue targets, our OPEX gap to target. We can maneuver through to a reporting summary, as we will do in a moment, that shows us our integrated financial statements. We have a consolidated, or rather an extract from our income statement here that gives us a quarterly view from our revenue through to our net income. And we have some revenue breakdowns in terms of a breakdown by geographic region. And we can, of course, see here that we may want to look at Europe specifically, or maybe we want to look at the proportion excluding Europe or any other areas. All of the charts that we see in Anaplan are, of course, interactive for the user. Here we have a revenue breakdown by product category. And again, depending on the product categories that you have, we can then break that down accordingly and interact with that in the ways that we need to, so that we can extract that information. In terms of KPIs and metrics, again, from this quarterly view in relation to setting our budget for FY21 in this case, we can see our year-on-year revenue growth percentage through to our net income percentage. And we can look at that through the hierarchies of geographical regions that we have. And of course, we can see that here, being able to look through the different countries that would roll up into Europe, or those which may roll up into North America or otherwise. And of course, the option to look at this from a total company perspective, from an aggregated view. When we speak of Anaplan as a cloud-based connected planning platform, we will often speak of multidimensionality. And multidimensional modeling and multidimensionality in Anaplan is really referring to lists. And those lists that we're referring to are shown here. And we can see that in this organizational structure, a list is effectively just a group of data, a data set. And in this case, it's referring to organizational structures. But as you'll see through the demo, lists can apply to pretty much anything that you'd want them to be. It could be cost centers, it could be chartered accounts, it could be employees, it could be locations, pretty much anything that you'd want to have as a structure in Anaplan, we would create that as a list. Another dimension that we have here is time, and it works through the same way in terms of hierarchy. But of course, in this case, we're looking at the highest level in terms of year. We could be looking at a half year or a quarter year or a month or a weekly level of granularity. And naturally, we would have the aggregation, as you would expect with any list. So if we're putting it at a lower level, that would then roll up accordingly. Or we could be putting it at a higher level, such as year, and then allocating down accordingly. And the final dimension that we have on this page is version. And a version in Anaplan is the driver, if you like, that enables our scenario planning functionality. So the ability to say that let's look at everything that we're looking at here from our forecasting in relation to budget, or we may want to look at it in relation to a completely different scenario that may be our budget scenario X, maybe because of COVID, or maybe because of an event that we know is going to be happening. This is all managed through the versions. And within those versions, we're then able to say how we're able to determine how we differentiate between actuals and forecast. And we use a functionality called switchover that simply enables us to choose the period up to which we will actualize data. And that's all functionality that we have within that version section in Anaplan. So as we look now at our reporting summary, still within the finance section of our connected planning workflow, as it were, we're looking here at our integrated statements, our integrated financial statements. And the integration comes from the fact that we have formulas in the background of each of these applications that enable Anaplan to update in real time. Those formulas are defining the relationships between each of the modules that we have. And in that, we're able to make changes in relation to one statement that will then affect the other statements based on those relationships that we've set. And in this case, we can see a summary of our cash flow below with our opening and closing balances and our cash flows from operating, investing, and financing activities. We can see our balance sheet summary here, where we're comparing our current assets to total assets here with a summary breakdown quarterly in this view. And of course, we can see our income statement summary with our total revenue through to net income, a quarterly view again. And on the graphic here, we can see our gross margin, total cost of sales, net income, and our gross margin percentage. So being able to make changes that whether it be a higher level in terms of a top-down strategic approach, which we'll cover now, or a lower level in terms of a bottom-up forecasting approach, we're able to bring all of this together in one view and produce this in reports like this so that business users can access that information. And for the changes that we make at those levels, we have a real-time update so that we can see that taking effect throughout the entire model within our connected planning environment. So let's look in a bit more detail at that top-down revenue planning, that strategic planning. And in doing so, we're now starting to move more into that sales perspective. So the focus here in our top-down revenue is that we're effectively setting a target. And from that top level, we can see the gap to target that would be coming from these top targets that we're putting in and the bottom-up forecasting that may be happening in the wider team. And we can also see the aggregated or combined total planned growth as a result of the top-down targets that we're putting in by region in this case. So through the hierarchy that we have in place, through Europe, North America, Asia, and South America, we're able to then choose what we might want that target to be as we set those targets for Europe being 6%, so that the prior year sales of 423 million for Europe are becoming 449 million based on that 6% uplift. And we can then start to set allocations for how we want that 6% to be allocated across the UK, France, and Germany. We may say that for France, we want to hold it at the 6% that it is. We may say that we want an override in relation to United Kingdom, and maybe we want to be a bit more aggressive, and we'll say that instead of the 6%, we're going to have 8%. So naturally, Germany will become the balancing figure to bring us back to what we need for that 449 million. And that's what we're seeing here in terms of Germany then having the target of 7.8 million. We can input a final target if we want to, if we wanted to input an absolute number instead of a percentage. And of course, this approach that we're following here in terms of this top-down allocation is an approach that is using the list functionality. And as we know, lists in Anaplan are created in any way that we want them to be. A list can relate to anything, as we previously said. So because of that, here we're looking at an organizational hierarchy, but this could be for anything. It could be for products, it could be for customers, it could be for employees, it could be for sales channels. Any list that we wanted to use would be able to utilize this top-down allocation method that we have in terms of forecasting. And for the changes that we're making, we're seeing that take effect, and we're seeing the gap to target amending, and of course, the total planned growth amending as well. And here we can see visually across each of our regions how that looks in terms of a prior year sales versus this final target that we're creating. As we then look at the bottom-up revenue piece, we're able to see more of a focus now on the products that we're selling, and we're going down to a lower level of granularity in terms of where those products are being sold from, or maybe who they're being sold to. So where before we were looking at Europe as a region, and United Kingdom, France, and Germany in their roll-up to Europe, we're now looking within the UK, for example, and we can look now at London and Manchester and any of the other cities that maybe are rolling up into that, so that we can look at the more granular information. And in doing so, we can see our product breakdown, and these, of course, would match your organizational product hierarchies. And we can see those within the product categories that we were looking at previously. So on the previous report from that higher level, we were looking at product category 1, product category 2, and so on. And now we're starting to look within those categories so that we can start to look at product A, B, and C. And this can go right down to the SKU level or any level of granularity that you require. And within this, we can see the prior year pricing, and we can choose the year-on-year adjustment method in terms of whether that be an override. So where we may be saying that instead of 150, we want that to be 180. Or we may be saying that we want that to be based on a percentage growth, where here we can see that we've chosen the growth. And as a result, we'll be able to input a percentage so that we can say the percentage that we want to increase is going to be X, and that would then drive the new unit sales price. Our unit cost is an input, that of course can be imported or input. That could be driven by a percentage based on a margin, but in this case, we're inputting that unit cost, we're uplifting the sales price, and then that's giving us a margin via a calculation. From that, we're able to see how that comes together, and we can see the unit sales price flowing through from above by product. So the 180 in the sales price is then flowing through here when we're looking at product A, for example. If we were to have this, for example, being 200, and we were to look at product B, then naturally we would see this changing to 200 in terms of the unit sales price, because it's reflecting that low level of product that we have in the grid above. And that unit sales price is then being combined with the unit sales volume to give us our gross sales revenue. We can apply any discounts that we require at this high level. And that, of course, can then flow all the way through to produce our gross margin. And we can see our gross margin percentages by month at the bottom. Visually, we can see our cost of sales, our gross sales revenue, and gross margin percentage from this view. And in relation to our gross sales revenue, we can compare our products here and see those as well. As you'll see, sometimes we have purple numbers and sometimes we have these black numbers, and the difference is whether there is logic in the background. So where we have the black numbers is because there is a formula in the background, and Anaplan is self-preserving in terms of the integrity of the data. So we can't change those as an end user because there's logic in the background that we don't want to corrupt. But where we see it being purple, that's because it's made for us to input. So we can either input that ourselves, or of course we can import that information, depending on how we want to interact with the system. And for places that we have made changes, if I look at the history, I can see a history in terms of what has been changed. So I can see that it was previously 180. I then changed it to 200. I can see it was in relation to the price book. I can see it was a price adjustment that was made, the time that it was in relation to the product that made the change, that I made the change on, and of course the user who made the change. And we have our ID log that enables us to restore to previous points in time if we should so need to. So there's full transparency in terms of everything that's happening in Anaplan, whether it be me changing data in a cell or whether it be more of a system change in the back end, imports, exports, creations, deletions, and so on. But for everything that we've created here, it's been quite high level, even though we have looked at this product level in terms of pricing. Of course, one variations we're going to have through this is going to be in the sales volume. And as we looked at this sales volume, we can, of course, input from here. And I may say that I have specific numbers that I want to put in myself based on my commercial knowledge that I may want to input. But another way that I may want to work, especially in a connected planning environment, is to start to use Anaplan to drive that sales volume forecast. And in doing so, we would want to leverage predictive analytics, and we would also want to leverage our demand planners that we have in the business that have that commercial knowledge of how things are looking over the next X period of time, depending on what we expect to happen. So from here, we can see our demand planner forecast. And in this, we have a series of different views that we can look at when we're wanting to view our data. Ultimately, on this top view, we're looking at our baseline statistical forecast in relation to our demand planner forecast. And this differentiation is because the baseline statistical forecast is the predictive analytics piece, where Anaplan is using statistical calculations to drive the forecast based on history. And we'll look at how it does that in just a moment. The demand planner forecast is our user input as demand planners, where we're leveraging our commercial knowledge to overlay that statistical baseline forecast. As we pull through actuals for the relevant periods, we can of course update those as well. Right now, we're looking across all planning weeks. And as we know, in terms of the dimension of time in Anaplan, we can choose whether we look weekly, daily, monthly, quarterly, half yearly, or otherwise. But we could look at all of the current year weeks, and we can do so by simply making a selection on our filter, and that would adjust that information so that we can see it accordingly. Or it may be that we want to look at a rolling 13-week view, and again, we'll be able to see that accordingly, depending on the filter that we choose. So one of the key things with Anaplan, as well as of course being a powerful engine for forecasting and planning, is being able to analyze the data that we have so that we have a strong basis for that forecasting. And being able to manipulate large data sets is of course one of the key ways in which we do that. As we focus on that statistical baseline, that forecast that we have here that runs across weeks that we're going to be using based on our historical data, we can start to leverage those calculations that we have in the background. And in this demo, we have about 25 calculations that exist in the background. And those calculations exist here, and we can see each of them being grouped. We've got curve fit calculations, smoothing calculations, seasonal smoothing calculations, and so on. And what Anaplan is doing is running all of those calculations across every single product that we have at the level of granularity that we want it to for that product. So if we're looking at SKU level data here, then of course we would see SKU level calculations. If, however, we're looking at product category or grouping level data, then of course the calculation would run at that level as well. So it's completely flexible in terms of how we're applying these calculations. Initially, we're pulling through a history. That history is going to be seamlessly integrated, or rather that history is going to come from data that is seamlessly integrated from your source system. Anaplan will then be choosing the forecasting method of best fit, which in this case is multiplicative decomposition, and then it's producing a forecast from that. It's then giving us a trend line so that we can see the trend or the correlation based on that calculation that has been run. And naturally, we have the choice to override if we want to, so that we could then see what it may look like if we were to choose a different calculation in the background. And of course, the calculation I've chosen as an override here is multi-decomp logarithmic. And we're seeing the trend line that applies to best fit. But of course, we're seeing the forecast that now applies to the override that I've put in place. We can see the metrics that Anaplan is using over here, or at least one of the metrics that Anaplan is using over here in terms of a MAPI. And that characteristic, or rather that metric, is being used to drive that best fit allocation. So this is part of the category that's being used to determine the best fit. And of course, we have our ranks and our demand variability, all of which contribute to Anaplan choosing which calculation is the best fit. And we can also look visually ourselves, and we can see year-on-year comparisons below, and we can see those over here on the right. And on the left, we can specifically look at our unit retro forecasting. And this is really key because where we have a forecast that we've populated for the future, we're able to then look retrospectively to see how that forecast would have matched the actuals that we have, back testing, for example. And in that, of course, we're gaining more confidence in the numbers that we're seeing here. So from that predictive analytics piece, we're then able to drive that baseline that serves as a foundation for our forecasting. And we can now overlay with our demand planners to start to input any risks and opportunities that might be relevant for the forecasting period that we're looking at. We can input commentary again at any level of granularity that we want, and we have that full transparency in terms of an audit trail of not just the commentary, but any data that we input in the system. And we can also input manual adjustments at a high level if we so wish. And in doing so, of course, they will flow through and update the system in real time. Down here on our demand planner forecast versus the baseline stat forecast, you'll see that for the changes that I'm making here, of course, that's flowing through here, and we're seeing that update in real time through the system. The key thing on the risks and opportunities is, of course, giving the user an easy and intuitive interface to work through, while enabling them to input any kind of forecast that they deem relevant that we may want to consider in addition to that stat baseline that we have. And if we imagine there may be lots of demand planners that are inputting all of the risks and opportunities that they see, they're naming them in the way that they think is relevant, they're choosing the start periods and the end periods that would relate to these opportunities or risks, and they're choosing the adjustment method that they would want to apply, whether it be an absolute value or a percentage change. And then, of course, they're putting in that percentage or that absolute value depending on what they believe it to be. And after inputting all of the risks and opportunities, maybe we then want someone further up the chain to say, okay, which of these do I want to include and which of these do I want to exclude from my planning? And this is where we can now choose that which we want to include or exclude. And you'll see the changes taking effect in the charts below, depending on what I choose or reject. We can combine this with a workflow so that we can have this lock after submission. So again, you can have more control centrally in terms of who is inputting, when they're inputting, and ensuring that numbers are not changing. But similarly with this, in terms of changing numbers, we may want to work within specific scenarios. And it may be that we're working within different scenarios to see how different opportunities and risks would affect different scenarios, depending on what we think may happen. So it could be linked on lockdown in relation to COVID. It could be linked on different promotions in relation to specific product groupings, or whatever it might be. And we can navigate all of this from the page in terms of adding risks and opportunities, removing the risks and opportunities, and of course, duplicating any risks or opportunities as we need to, as there may be some that are very similar, but of course have slight differences, slight nuances. So we can save a bit of time by duplicating a risk or opportunity and then making some small changes to that. The goal from this demand planning piece is typically to build a consensus demand plan. And that consensus demand plan is, of course, unconstrained, which means at this time, it's not considering our ability to supply that demand. And as we're looking through our walk from the baseline to demand planning, and we're able to choose the different periods that may be relevant to us, and as I choose the different periods, we'll see the charts changing accordingly, depending on the changes that exist. Over here on our visual, we're able to see our demand planner forecast in relation to the baseline, and we can see where the differences are. But now that we start to move into more of that capacity plan, moving away from that unconstrained view into a constrained view that we would ultimately want to flow back into finance, we focus here more so on that inventory planning and that supplier planning. And we have our same filters up here so that we can view in our current year weeks, all planning weeks, or of course our rolling 13-week view. And we could add or remove these weeks and change these views in any way that would be relevant to us. And we can start to set certain properties or assumptions or characteristics that relate to the different levels of granularity that are important to us. So here, for example, in relation to product A, maybe I'm going right down to my SKU properties, and I'm now inputting lot sizes or minimum order quantities, minimum and maximum stock levels. In terms of service level, I might be looking at product ranking, demand variability, and service level percentages that are important. Forecast accuracy, I could input as a target, or of course, I could have it as a calculation driven by the output of the information that I'm putting in. And of course, suppliers. I may want to choose primary suppliers or have the system tell me who the primary suppliers are in relation to any specific product. And this would be driven by assumptions that we have set in the underlying model. Shipping methods. I'm able to set a standard shipping method here. And in that shipping method, I'm able to choose basically what will apply to all of the products that we have. And at a later stage, we'll be able to see how we may want to make changes to those shipping methods in relation to either specific weeks or specific products. But here I'm setting, if you like, a global setting or a standard setting, a default setting for shipping method. And we can see that I'm choosing between truckload or effectively road transport, air, rail, or ship. And each of those will come with their assumptions in terms of lead times and the relevant costs. And we can set those as a standard or default level here, or of course we can go into the granularity of how they apply to each one accordingly. And then when we look at that week view, we're able to now see at the bottom in terms of a grid, the detail on how we're going from that beginning to ending inventory. And of course, visually, we can see up here where our ending inventory is falling below our required levels. And we can see that through our ending inventory over here in blue, and of course our safety stock here in red. And one of the key things that we want with our supply planning, while we need all the granularity, and of course we need to have that detail, is being able to see visually very quickly where things look like they may go wrong. And this is often quite a challenge that we find customers facing before Anaplan. And in this chart that we have, we're able to see that very quickly. So we can see our purchase order to raise, and we can see that by week in relation to a product. We can see our planned demand, our ending inventory, and as we said, that safety stock target. And in looking at this, we can see that we're getting pretty close, if not below it over here on week 42. And we can see that we actually dropped below that from this week 48. And that, of course, will be flagged in the numbers that we have. We can see where reorders are required, and that flows all the way through to the other end. So we have all of the flags that we'll be seeing accordingly. And we can then input any overrides that we require in here as well. And we can input those here on the override reorder quantities. So what we're effectively saying here is that where the reorders are required, and I've input some already so that it lifts us above our safety stock target, we can input these and then choose their application depending on the selections that we make. If we approve a reorder quantity, then it takes effect. If we don't, then of course it doesn't. And again, this can be within one role, or this can be separated out across multiple roles, depending on the way that we want depending on the way that we want users to interact with the system. We have our standard shipping method that we chose up here, and we said, for example, that's going to be truckload. But in some situations, it may be that we need to have an override on that. So for the 2000 reorder quantity, maybe that needs to be by air. And depending on the shipping method that we choose, we would then see the relevant changes happening in the grid above. So if it's on truckload, we would then see our purchase order to raise moving. And if, of course, that were to be on air, then we would see it moving accordingly. And this is going to be driven by the assumptions that we have around lead times and otherwise. So from now looking at that supply chain S&OP aspect, we're now starting to see how we'll be driving that unit sales volume number that would then be contributing to that gross sales revenue number with the sales price that we have here in our price book, that ultimately will flow all the way through to that P&L in terms of our revenue line. And with that, we can then move on to more of the OPEX side as we look at our top-down forecasting. And in that top-down forecasting for OPEX, the logic in this demo model is that we're using a revenue-driven target. So we've put all of our effort so far into driving that revenue number and understanding everything that goes into that. the OPEX number is going to begin as an allocation of that OPEX, of that revenue number. And we can choose the allocation method here by choosing either the prior year percentage of region, maybe it will be an FTE percentage, or we might want to choose a manual input that we can of course set depending on the parameters that we want to put in place. And in doing so, we then see the effect of the year-on-year growth of that OPEX, and we can see our prior year spend in relation to the revenue-driven target that we're looking at here. Visually, we can see all of the waterfalls and the breakdowns and the comparisons that you would imagine, and we follow a similar approach in terms of process here to the top-down revenue allocation, in that we're able to input that starting point that we have, and then we start to allocate either manually or hold or override any sections that we require of OPEX, so that we can ultimately drive that final spend number. And we can look at that visually by any of our OPEX groupings, and we can see those across the countries that we have. As we go more granular, we start to look at the bottom-up OPEX piece. And in doing so, we can see a visual dashboard here, a report that is giving us that summary again, like we saw before, of lots of different moving parts in one nice succinct report. And these reports that we're looking at for every page that we're viewing today, these are accessible from mobile phones and tablets, as well as, of course, laptops and desktops. So for the reports that you're building for your users, you're able to build them in custom ways so that people can see them on the go and extract the information that is key to them at any point in time. If we focus here on our salaries and benefits, we can look then at our workforce planning. Here from an employee cost perspective, we can see the gap to target salaries, and we can see that it's favorable. So our top-down target is effectively in line with our bottom-up forecast, or rather the bottom-up forecast is less than the top-down target by 0.54 million, so it's favorable. And we can see that total OPEX number as well, just to give us some perspective. And within that, we can then start to see within any section, within any function or department, we can start to see the employees that might roll up into that area. So if I'm looking at London Finance, I'm looking here at my budget for FY21, and I can see all of the people that would roll up into London Finance. And if I click on any one of these individuals, I'll see the information below changing. So I see here the employee expenses with a total salaries breakdown and a total benefits breakdown, making my total compensation number by quarter. And I can see a GL breakdown, a payroll GL breakdown in relation to that individual as well. If, however, I were to choose Mitchell Foster here at the top, we'll see that there's no information flowing through. And the reason there's no information flowing through is because the role that we have has an approved budget in terms of base salary of 120, but we've input an override of 125. If I were to remove that, then it would flow through, and this of course will flow all the way through to the P&L that, as we know, is integrated with the balance sheet and the cash flow. But if I put that higher than what it should be, then of course it triggers and it's no longer being approved. In terms of approval, the person up the chain from me would now be able to come in and make any changes that they wanted to, so they could either approve or reject, and they can see everybody that needs to be approved, or maybe some to be hired roles that need to be approved. And they can then look at the banding that we have that's approved in terms of budget, and they can see the override, and they'll be able to make their choices in terms of whether they want to approve or reject that. And for those changes that are being made, that updates in real time, so that on my end, that 121,000 is now being approved, that's flowing through, and that real-time update is now taking place. And from that, I'm able to add any new employees. I can make any changes that I need to make in here as an end user. And of course, I know with confidence that that's going to flow through to the relevant sections as needs be. And if I want to go into more detail in terms of the HR side now of our connected planning, I would then be able to head into this app, or this section of the app that drives the HR piece. And within this, I'm looking at a headcount report. I'm specifically looking here at United States and the United States regions. And of course, I can set it so that it will be looking at local currency. Therefore, in this case, it's going to be showing me the US dollars that relate to the United States. Within that, I can see a breakdown across departments. I can see my start of year headcount, transfers out, transfer in, any expected attrition that we might have, hiring to date, and so on. A view of my employees and workforce planning that is now going to be more geared to your HR users than necessarily your finance users, as the focus starts to be more on the person as opposed to, if you like, the employee cost. And it may well be that finance are also looking at that aspect of it. And the key thing is that within this connected planning environment, we're able to work at pretty much any aspect that we require within this HR piece. So as we work through now, we can start to look at the different departments that we have, as we said, in terms of where employees are and where they're moving from and where they're moving to. And within that movement, we're also going to need to be looking at hiring. And talent alignment is going to be a key part of that to drive the need for hiring. And here we can see the way that we may want to work that. So we can see now in relation to a specific role, so we've chosen here software engineering, for example, and we could choose between all of the roles that we have in the organization, the one that's going to be relevant to us. We could choose a specific number of FTEs that we think we may need based on, for example, a plan that has come through from the head of software engineering, and they've said that they would need 7 people to fulfill a certain skill set. And then in doing that, we can now start to look at what the key requirements are. So for software engineering as a role, we can see that we have a level 1, a level 2, and then a senior software engineer. And we can now start to set what the necessary skills are in relation to the preferred skills. So for example, maybe AWS solutions architecture is not a necessary skill for a software engineer 1, but risk and information systems control is. Maybe information security manager is a preferred skill, a nice to have effectively, and information system security professional is a necessary skill, and so on. And all of these, of course, can be set in a custom way. And for the changes that we're making at this level, you'll see that the skills gap is changing accordingly. So if I reduce the bar, if you like, in terms of what the software engineer level 1 has, that skills gap will shorten, because naturally it means that we have more people that are able to do that role. But as we increase the requirement, then the skills gap will increase, and then we can look at the office attainment and the qualified job market availability, and we can start to build a staffing plan and a recruitment plan from this as we start to progress. Coming back to our bottom-up OPEX perspective, we're looking here in more detail at that salaries and benefits. And we may have decided to focus on the salaries and benefits because when we're looking here at our OPEX targets from a higher level perspective, we can see that we're slightly adverse here in relation to our current plan and our target. So we were looking initially at setting that top-down target. We're now looking at how we would drive that bottom-up forecast, and we can take that right down to the nth degree in a connected planning environment, depending on how you want to work. Visually, we can see our target, our current plan, and our actual run rate. And of course, we can see any alerts that we have being shown here in G&A, salaries and benefits and marketing. And that, of course, is what we're looking at down here. And we've just looked at some of the drivers that we might have in our workforce planning perspective and how that might tie into HR working alongside finance. If we look more specifically at our sales and marketing, we can now see in relation to marketing how we might want to forecast our marketing expenses. And here on this marketing expense planning page, we're able to look in more detail at some of the costs that we may have that relate to marketing. So if we look specifically at public relations, we can now start to look within the different departments. So we might look in London finance, or even more specifically in London marketing. And we can then see each of the items that we have within public relations, and we can input any changes that we require in terms of the input that we have by month for that specific item. And those changes that we make, you'll see, are going to be changing the total numbers as they roll up accordingly. And we can see the expense contribution overview as it shows us the breakdown within marketing of the costs that we have. Naturally, we can input any commentary, and of course, we can submit when we're ready and combine that with a workflow so that would lock down and there won't be any changes until, of course, that's been approved up the chain. In terms of sales performance management, we can see here again being able to choose by region or by location. And in this case, we'll look at Northeast in relation to US East of USA. And we can now start to see incentive compensation management, monthly to date performance, any quarter targets that we have at the moment, any goals that we have, and of course any attainment that we have as well in terms of how well teams are performing. We can see payout details in terms of compensation. We have our goal versus bookings as a visual that of course is really key for us in a sales performance management environment. And we can add to this with any kind of detailed or high level territory and quota planning that you may require. And of course, seamlessly integrate this with CRM solutions such as Salesforce or otherwise. We have a ranking here in terms of team details. So this would very much be a manager view in this case, and they'll be able to see all of the members of their team and have a ranking of how everybody's performing within that specific region. The detail we have through here, again, feeding back into that overview when we look at the sales and marketing number of 0.23 million. Again, we can go into any level of depth in terms of granularity, in terms of what that is. The exclamation mark simply telling us that in this case, we have an adverse gap to target. If we were to look at others, we would see that it's going to be more favorable. And of course, in those situations where it's favorable, it tells us that it's okay because we would have a favorable gap to target. From here, if we have a quick look at our short-term cash flows, sort of a hybrid one here in that naturally it's going to sit in finance in terms of that cash flow perspective, but it's going to be heavily linked to our S&OP when we look at our inventory levels and we look at our payables and our receivables, especially from suppliers and customers that may be coming from more of an S&OP perspective or even a procurement perspective. But ultimately, in terms of that short-term cash flow planning, what we have here is an example of how that could work all in one place. So linking into what we already have in our connected planning sort of journey that we're showing here, we'll be able to look at our aged debtors and our aged creditors with a breakdown in looking at our receipts that we have from our invoices and of course our payables from our purchases. We can see a visual here in terms of our closing cash balance, our available cash balance, the gap between those and whatever facility we're using, an overdraft or whatever that might be. And of course, a cash goal, which in this case is 3 times payroll that we can see here visually. And we can then go into any detail that we might want to go into accordingly, whether it be overdue invoices or the invoice values that we might want to look at. And within these, we're then able to start to specify based on the extent to which any debtor or creditor is overdue, whether we want to now offer discounts so that maybe we can receive that sooner, or maybe we want to write it off if we don't think it's realistic anymore, or maybe we want to delay payments or not, maybe we want to speed up payments. All of these kinds of adjustments can be made through here. And on the focus of short-term cash, we can of course also be looking at some of the schemes that we've seen through 2020 as a result of COVID, around VAT amount deferred, and of course around furloughing as well. With so many different moving parts that we have, so many different scenarios, different versions, what if environments, and so on, we naturally need to be able to compare these. And that comparison comes in this variance analysis page that we have. Excuse me, and in this page we can see that we have a total OPEX variance, and it shows us what that is. And we can see that we have our commentary that we're then able to input depending on what we want to comment on any specific variance. And ultimately here, as we look at the OPEX breakdown, we're able to see the forecasted number, we see the actual number, and of course we can see the variance that we have in relation to that. So with our actual number pulling through, our forecast number pulling through, we can see that variance broken down into that which is due to FX and that which is due to operations. And on the conditional formatting, we can then choose a level of materiality. So here, for example, the 18% and anything below are not showing because we've said the materiality is 20%. But of course, if we had said the materiality was 15%, then it would be flagging more. We can look visually to see the drivers for those variances or the variance types that are attributable. And in that, we can make changes that will be relevant so that we can then see visually the key drivers for any changes that we see or any variances that we see from the targets that we've put in place. Everything, of course, updating in real time and moving through to those final numbers as we would expect. So to bring it full circle and look at what we've covered here today, and I appreciate that it's whistle-stop tour, as it were. But of course, there's a lot to cover in a connected planning environment. And I think the key thing to note is that this isn't something that needs to be done in a day. We don't like to boil the ocean or try to boil the ocean, as we often say. It is an Anaplan journey. It's a journey of transformation that you'll go through. And in that journey, we may well tackle each of these use cases as separate pieces. We could tackle them all together if that was the way that you wanted to. But the key thing is that the approach that you are comfortable to go through in terms of this transformation is the one that we would tailor to your best way of working. But all of these solutions are, of course, possible and very likely on the platform. We see them here today in terms of how they work, and we're used to customizing these solutions for our customers daily. Key areas that we've covered today, to recap: finance, supply chain, projects. In fact, I don't think I touched on projects, so I will quickly just give you an overview there. Project inputs, in this case, we have our step one being our project details, and we can input any project information that we have there. We can add new projects and also have some alerts in terms of what the user needs to input. This could also be linked to business cases so that we could have standard structures for input of business cases. We have our project name and any modeling assumptions that may be relevant, budget years, scenarios that may be relevant, how many years before a cash flow will be generated, or how many years of cash flow will be generated from a specific project. And of course, any further information as well around descriptions or relevant details that may be in place. And that can then go into more detail as we start to look at the investment details around projects, and we can start to build out specific scenarios. So we could say that the project would work in a certain way in this environment, but we would expect a different outcome in a different environment. And of course, we can then let Anaplan do the heavy lifting as we start to copy from one scenario to another, because of course the project may be exactly the same, and we're just saying that scenario one looks like this, scenario two looks like that. And we're able to do that by copying the scenario up here. In that, we can input our cash flows and any financials that we have in terms of investment details around those projects. And that's what we're seeing here through this page. This can then tie into your cash flow, your financial models, and any other models that you would want to link this into when we look at that connected planning environment. And that's very much what we're covering here when we look at this project example in relation to IT. But of course, it could be in relation to anything that has a project environment attached to it, from construction to anything else that you can imagine. So we've looked at our financial planning and analysis. That can also expand into specific use cases, IFRS 16, financial consolidation, and otherwise. We've looked at supply chain and the general S&OP way of working, looking at demand planning and supply planning, unconstrained demand views and using predictive analytics, and of course our capacity and supply planning in terms of production plans and otherwise. The project piece we just touched on a moment ago. We've looked at our marketing in terms of our marketing plans and how that may work, and our campaigns that we want to look at, and the way that flows into finance, and also how that can link into revenue. We've looked at our workforce planning and the perspective from HR, looking at headcount, moving from one cost center to another, looking at hiring and recruitment, talent alignment, but also, of course, the employee cost in relation to finance and how that flows into the P&L in real time. And finally, we've looked at our sales performance management from an incentive compensation perspective, territory and quota, top-down sales planning, and also, of course, the revenue piece that came through from finance and supply chain and how that flows into a sales view. So that concludes the connected planning webinar for today, and the many ways in which Anaplan can provide connected planning solutions. I see no questions here at the moment. If any do come to mind, of course, then feel free to email us, and we'll get back to you as quickly as we can. And if there are any requests for individual demos, then of course we're more than happy to help with that as well. So thanks a lot for your time today, and of course stay well and stay safe, and we look forward to hearing from you soon.